Hello and welcome to another video. In this video, I will cover the Apple stock. And basically, earlier I have already covered the Facebook and the Nike stocks. And if you already have watched that video, you have noticed my pattern that I have focused and always focused on the fundamental analysis, basically looking into the 10K management notes, cash flows, statements, balance sheet, and income statements. Okay, the title of this video is what Warren Buffett buys, and basically is the number one stock in his portfolio. The idea was why I pick Warren Buffett because I I want to I'm thinking of creating some stocks which these big was thinking who is this big guys, or in the layman terms, value investor, right? Who is the biggest value investor? What he is doing in terms of his portfolio, and to see how and to see, and when I cover that. So I was thinking maybe some other portfolio or money managers, but I think okay, let's start with Warren Buffett, because he's one of my favorite, and not only mine, but I believe is everybody's favorite who is investing in, who is focusing on, especially on the value stock. And also he's one of the good guys. Okay, what at least what I have a huge regard to him. Okay, so I was doing some research and I find that okay, the Buffett portfolio when he was is I won't give you the percentage right now because I don't want to get influenced by that. Okay, what percentage of Apple stock is Warren Buffett holdings? I first like to go over the stocks fundamentals, uh, the these the trends as usual, and go to the 10K. And also then somewhere I think before I go into deep into the 10K, but on the analysis, where first I want to give you the good and also the bad of the company. Mostly as the Apple product, we somehow either we have used the iPhone or app, or the wearable products, or their iPad, right? Most of them people should have it, right? Maybe so, and it's quite famous. Yes. These products, and very reliable. So from product wise perspective, I'm a user of the product as well, and I like the product. So that's number one. And it has a good brand, and people treat as a luxury product. So that's another from the soft perspective, or from the goodwill perspective in the market. And they've been in the market, in whichever category they come, slowly they take over and do the best in that category. Okay, so that's what is my opinion, right? So now, what's the fundamental saying about the company? So let's find it out. Okay, and just if you are new to the channel and you haven't subscribed to it, so I suggest kindly subscribe. And there are other, I usually create the stock analysis, right? Or the on the favorite stock. If you have any favorite stock which you want me to cover, kindly put in the comments, and or like it, then I'll try to cover that as well. Okay, let's get started without further delay. Okay, as usual, let's say this is the Apple ticker, and I have plotted the from the 3 year to 5 year, 10 year, and 15 years the Apple total return. The total returns implies that it has the price return plus the dividend return, right? Because Apple is the dividend paying stock. Year to date is until now, this year, how much Apple has performed. So we have note. So if you can see here, I have plotted this against its benchmark, or this its sector, consumer electronics. Okay, which is highlighted in orange. And okay, maybe I'll put some percentage there. Okay, so this one is orange one is the consumer electronics, and the blue one is the Apple. Okay, so you can see that it's consistently so for 15 years, if I very long term, you see it's really beat the market, right? It's 32% as compared to a sector is 24%, right? So which is a way good. This means if you have bought the Apple stock like 15 years ago and keep investing your money, for sure we need in every 3 years, if we have almost I think 22%, if we get the return, our money will double. So you can see how many times the money will be doubled by then, right? And then even for 10 years is 24, and 5 years is almost the same, and 6 years is same, but in the long run it's really beat its sector, which I really like about it. Okay, so let's see from the return perspective. So the return perspective, this is the Apple ticker, and here I have the return on equity. Again, I have return on investment capital. So basically, how if you have invested in the company, how much return it gets, and the return on assets. Okay, so again we have this plot here. We'll make it a little bit bigger so easier to see. So the blue one is the return of equity. So you see from 35% to 55%, it's really grow up very well, right? It's within the range of 40, comes to 30, and then it goes back, and it's growing since 2000, and it's growing since 2006, 17, if you can say, right? Because 16 and 17 it was almost 37%, and then it goes to jumps to 49 point, almost 50, and then 56% almost, right? And return on investment capital is also doing very well. And this is a very huge time series or data series I have plotted right here. Is 10 years. Usually I do 5 years, but I thought just do extra due diligence on this stock, and not influenced by that this is the bought by some of the great leader, right? So have some independent opinion. It's good to have that. And return of assets is also, it's been consistent around 15% for the last few years. It's dropped from 20 a little bit, but then overall it's okay. So it's pretty good from return perspective, high level return margin. And I'll show you, break down this return on equity, right, from in the in a little bit later, how in the video, how from where the return is coming. Either it's coming from net income or some leverage. We'll see that. Okay, so we keep that suspense a little bit for now. Next is the price to earning ratio. That's not bad actually, if as compared to this product is 18, and it's quite consistent. 18 it was dropped in earlier, and then it come back again. Price to book ratio is also not bad. It's only 11 times as for the Apple. It was way down earlier, but it's since last year to last year it's almost double, right? And price to free cash flow is also, if you see 10 year back, and now it seems consistent. And here again I have trying to plot in the same diagram, so it's easy to see. And the middle one is the price to book ratio, which is very low, and then it's come back. This is the recent one, 2020. But okay, now let's get started from the high level ratio. Let's look at the margin, right, and see okay what the company is doing. So from the gross margin perspective, you see the company is doing very well. 40% is amazing, or sometimes it's over 40%. But if I say, let's take the average, maybe I'll show you the average. Okay, I have a right average here. If I do the average, I haven't. So if I do the average here, so you see the average gross margin is almost 40%. That's what I was thinking. So it's pretty good actually, since this company is been in the market for so long, and it's continue to able to generate and innovate, right, the new products and coming into the new sectors. is remarkable, right? And it shows that it's maintained consistently in the past 10 years the 40% gross margin, which is an EBITDA margin is again, which is a very good over 30%, and that's the average I'm saying for 10 years. This is not just a 5 years, or this is a very long time average, right? So this shows the power behind the company, or the strong company. The net margin, which is the net profit margin, is above 20%, and it's been consistent. So the consistency is the key, right? I haven't seen much volatility in terms of these margin for 10 years, right? Which is really, I really like it. And the same thing I have plotted here. You see, it's come up in 2012 and then it goes down 13, but afterwards it's a little bit is more consistent. Okay. So these are the high level margin. So let's look deeper into the each margin, one more step down. So I like to do this kind of analysis. First look at the surface, and if the overall surface looks good, then go one step deeper and deeper, and that's how we find the pearl, right? Oops, this is my data. Oh, what is this? Yeah, I have highlighted here and hide. Huh? Okay, yeah, it's here. Okay, so this is the profit and loss again from 2019 to 2011. Now I'm showing the revenue trend. So now when I look at the revenue perspective, doesn't look much good to me since last year, right? So since 2019, the company is not doing well. One of the reason I just try to upfront tell it you that, as you know, their major product is the iPhone, and then since many years they have earned a lot of money from the iPhone sales. And since 2019, the iPhone sales, you see the weaker iPhone sale. I even put a comment. And when I will look soon the 10K statement, I will also show you what percentage of revenue is coming from iPhone, and what other variable and other percentage revenue is coming, but it's not able to make up that loss in the revenue of from the iPhone. Okay, but overall, so the cost is also been consistent with the revenue. I didn't see any major. Maybe I should not highlight this into red. Just put in the black. But really, what I want to see is, okay, so the earning per share is being almost same. Basically, it's 0.3 is just a few cents difference. I can show you in the 10K as well, but it's almost 12. So it's plateau. But one thing it make me curious, right? If earning is consistent, then how the return on equity jumps to 61%, right, from 55%. So that's what make me curious. And also, second thing is not contributed by return, right? So this is the bigger question to me. So when I look deeper into it, I notice the profit margin is quite consistent, right? Operating margin is a little bit dropped, which makes sense because revenues dropped. Then in the last, it's been a little bit get benefit from the tax burden, right? 2%. So basically, let's get relief from the tax, and which this 2% can be easily seen here, the effective tax rate. So they're getting the advantage, basically, which you are seeing in EPS consistency, apart from the revenue drop, is right here. Their tax rate is only 16%, is 0.1, a little bit shy of 0.1%. But you see, otherwise it was 24 something percent, and jumps down to 18.3%, and then drops back. So they get a huge advantage in terms of the tax, right? They don't have to pay the tax, so they retain most of their earning. So that's one thing it explains me from that perspective. The another what I find here, which I also highlighted here, is the asset turnover, right? You see the asset turnovers in the since past few years, especially if you see 4 years, right? It's keep and increasing. It jumps from 61 to 73 in 2018, and then keep a little bit more increase, 77%. So this means they are doing pretty well on the turnover side. The financial leverage, they're increasing more leverage, and it shows here. So that's why that's why the return is increasing as well. So this means less equity and return is up, right? Return on equity is nothing but, right, the net income over equity. So if the denominator is down, then the return is up. So this is also explained that you notice I didn't put here the green because I don't like it, right? So this is a red to me as well, and this is red to me. Okay, but now I want to see what company is doing to bring the equity back, right? Okay, so that's one of the questions I have it. Okay, so but overall, if you see the company is doing good on the return on equity, and is good. So let's see how company is doing in terms of the cash, right? I don't there I have a more focus. Again, if I open this window, so again we have from 2011 to 2019, and you notice the company is, let me do the average here as a, maybe it's a little bit better. Okay, so on average the company is over 1.36, 130 or 40% you see in terms of liability, right? So this means the companies won't be get affected by the recent coronavirus and other issues, right? So they have enough. And if you even see from the conservative perspective, right, there is almost one, the cash. So they have a lot of cash there. So this is a positive sign, right? So I want to highlight this, that the company is doing way good in terms of that, in terms of this, right? So that's a good point. Okay, so now let's see from the, before we go to the 10K, and then I also show you the Buffett's percentage of the portfolio, right? How much or what percentage of the stocks maybe I should show. Okay, so the return of on the cash flow yield, it's doing consistent on the 6%. Here I just try to show 3-4 years should be okay. They have in terms of their total debt is 32%, and it's keep consistent. And the return on assets is way good as well. It's over 20 as in terms of their cash flows, right? If we see how much cash flow they are generating as per their cash flow, right? On the return as return on base of the asset is 20, above 20, almost 25%. And the free cash flow to equity is also good, 13 to is not that high. Okay, so these are all the positive factors so far we have. Okay, so let's, before I go to the deep dive and show you the 10K, I have noted, so I'll show you the what Warren Buffett when in his portfolio, right? So I'm not showing all his portfolio stocks. I'm just showing this portfolio, and you might surprise, and it's also surprised me that from March, from this year to now in May, he has increased. So he take the advantage of 5.77% he increased in terms of the weight on his portfolio. So it's now his Apple stock is 35.52%, which is way high, right? So he's a value investor, and he is the top value guy, and any news you see he's there. For sure I also have some Apple, but nowhere I don't do that heavy weights on that one stock, especially what if one stock crashed, right? Then the whole portfolio crashed. But he has a lot of cash power, and maybe he manages his own portfolio, so he knows well but as a normal or as a normal common guy, working class people, I won't recommend, at least in my whatever I studied, that you put all in one. But what it shows here, I'm not imposing, please kindly don't take that I am imposing anything on him. He is well qualified, but I'm just trying to say is everybody has their own profile and risk return, so please do consult your financial advisor before. But I can only speak from my behalf and my portfolio. I never do that much weight in portfolio, but one thing, a good thing I'll find about it, that he's pretty bullish on the Apple stock. Okay, so that's one thing. Now I'll show you a couple of more stuff on here on this his 10K. This is the Apple 10K. So now we see his revenue. The one important thing I want to share, so let me bring this here just for my notes. I have some notes here. Okay, so if I come here, this time I downloaded because I highlighted this 10K, but I put the link in the descriptions for you to easy to see. Okay, the key highlights which I want you to see here is that no single customer is over 10% of sale, right? So that's a very good sign. So, right, so they are not dependent on a single customer. And again, this is I think it's also self-explanatory, because they are mostly the retail, right? They do more retail. They are not providing much of the services also, but they do have some part in terms of a services as well, but it's very minimal. Okay, one good thing I find it, and I want to show, which affects the share price, maybe, oops, yeah, this one. Okay, so what is saying here in this one, which I like it, they did the board approved the share repurchase program from 100 billion to 175 billion. Okay, so that's one point, out of which they have bought 92.69 billion of equity. They have already bought it, and then they show some average price here, right, and different time period they did it. They still have 78.8, almost 79 billion left to buy their shares. Okay, which is very good, which is a very good sign, right? So this means if the company is buying share, it will increase the price and will get more return back if we invest with it. So this is the two key points I think we have get from here. The first, the company buys share, and seems like the Warren is also buying the share, right? And he's pretty bullish. We see is almost 36%. I'm not sure how far he will buy, but he's buying the company. So that's the two point. Actually, the 2 point I get it. The third point which I want to show is they also increase the dividend. Okay, so that's here. Actually, I just put up revenue distribution. Okay, maybe I'll go so this is the stock performance. I think it just shows, so that's not so. Yeah, sorry about it. I think I copied the wrong. I'll show you this one. Yeah, this one. So this is under the management discussion, note item 7, and it's highlight here that they also increase the dividend. So that's pretty good, right? So from 0.73 to 0.77 cents per share. So depending how many shares you get more return back. So the company is giving back actually to the right? Okay, so let's search for the revenue. Oops, why is not coming? Okay, yeah, next, that's good. It's next one is here, right? So you see here, and also notice, right, that their net sale is coming from the iPhone, right? And you see the iPhone is from 17 to 18, it was 18% up, but then it's 14% down, right? And although they are doing well on the iPad, is 16% up, wearable product is 14% up, right? But the major part of the revenue is iPhone, and we haven't seen, so they have to do really well to increase the sale of the iPhone back, maybe do heavy discount or something, but or come up with some new innovative product to really bring the growth back. So the next is from the segment wise, the North America for sure is a bigger segment, is these are in millions, okay? And here you see the drop in terms of the revenue, which is also I don't like it. So overall they're dropping. So based on these two factors, and yeah, their gross margin, basically they have some product and they have some services. So and basically you see the services is increasing, right? But the product sector is decreasing. You see, they also mentioned their year-over service gross margin has increased due to the higher service net effect. So for sure, Apple, they chart and the good in service. So overall, we have seen the dividend and other this increasing and overall positive. So one thing is still question to me is, and they have a good cash as a backbone. So there are a couple of points basically I got. So basically there are a couple of things when we have analyzed this stock, right, we'll find, okay, so the Warren is buying it, Warren Buffett buying it, Mr. Warren Buffett maybe, and then companies buying more, and they will continue. They have almost 80 billion left to buy more shares, so it will spike. And if they're a little bit more, I believe this is a good time because their price is down, but it's not down anymore, it goes up a little bit, but they have a money there. They maintain the consistent margins, dividend is increasing, good reliable product. So this is the long-term company, I believe, right? Although this on the short term, I do see that I'm not sure from where they will generate the revenue. Maybe you never know, they will announce tomorrow some kind of another good product. But people are, at least in North America, I have noticed people are crazy on the Apple product. I'm a user of the Apple product, and I do have their share as well, as a disclaimer. But I don't have that heavy rich share, right? Because I'm just a common, normal person. So that's it, I think, from my side. But each person have their own risk profile. They see return and risk basis. So if you like my video, and I have another 2 videos on the Nike and the Facebook stock, please do subscribe to my channel if you're new, or like it. I think you will soon see the playlist on that video. And I'm planning to do one more stock on the Warren Buffett's portfolio, which also is increasing in his portfolio. If you like this video, please do a comment, and if you really want me to make that video as well, please put in the comments below. And if you have any stocks and any of the portfolio manager which you like and you want me to cover his stocks, so I'll definitely try to cover after the Warren Buffett. Okay, otherwise I do have some few stocks in mind which I really want to analyze before I put my hard-earned money there. Thanks for watching, and have a happy long weekend. Bye.